What are the benefits to seller financing in a real estate deal? We'll demystify this topic in the following video. My name is Chris at Hauseit. Hauseit is the largest for sale by owner and buyer agent commission rebate company established in 2014 in New York. Well, one of the primary benefits to allowing or providing seller financing when you're trying to sell your property is that it may expand the range of possibility of buyers, especially if you know in advance that banks will not lend on your property because of various reasons, perhaps such as defects in the title, city violations, liens, or judgments. Keep in mind, however, that purchase contracts typically stipulate that the property must be delivered free and clear of title and free of any judgments, liens, or violations. As a result, you may have to negotiate with the buyer if you intend to finance the property and get away with it. So what's a good example of this? Well, let's say that an owner a few years back put a sauna into his home without getting the proper permits from the NYC Department of Buildings. Therefore, the alteration was done without the proper permits, and if found out, could result in a violation from the Department of Buildings. This is clearly an issue and may be discovered in a title search or not. However, banks, if they find out about this, and presuming that they do, may not agree to lend on the property. So therefore, if the owner knows that his or her property is unfinanceable, but wishes to sell the property as is anyway, perhaps because it's simpler, well, an option might be to provide owner financing. Presuming that buyers are okay with this defect, this greatly expands the range and the possibility of buyers because many buyers will require financing and only a very small subset of buyers will be able to purchase a property all cash. Providing seller financing expands the range of buyers in another way as well. Let's say that banks will finance your property, so it's not an issue. However, by providing owner financing, you do expand the possibility and range of buyers because there will be some buyers who can't qualify for a conventional mortgage from a traditional lender. Now, oftentimes, this isn't someone that you will want to finance either if banks have turned them down. But in rare and specific examples, it might actually be a great opportunity for you. For example, what if there is a buyer that makes a very high amount of income? Let's say he or she is a senior Google software engineer, let's say a principal engineer, which is one of the top ranked positions at Google in the engineering division. And let's say this buyer makes $2 million in income per year. However, for whatever reason, perhaps because of a high spending or extravagant lifestyle, he or she hasn't saved much and has only 10% in a down payment with no post-closing liquidity. As a result, let's say many traditional lenders have turned him down for a mortgage. Well, would you finance this buyer if you could? Well, the answer is obviously yes, especially if you don't have another buyer that is as qualified. Keep in mind that sellers can often structure a owner finance mortgage in many ways. It doesn't necessarily have to be a 30-year term like a traditional mortgage. It can be much shorter, say 5 or 7 years with a balloon payment at the end, structured in a way and with an understanding that this is more of a bridge loan so that the buyer will be able to get by, build up some equity, and in a few years take out the owner financing with a traditional mortgage. Another benefit of owner financing is that the underwriting process, as you can imagine, is typically much faster than that of an underwriting department at a major banks, and as a result, the underwriting and closing process is significantly faster. One more benefit to consider for sellers is that you will typically be able to negotiate a higher interest rate than a comparable mortgage from a bank. Due to the irregularity of the product and the illiquidity of it, you typically can expect to negotiate 1 or 2 or perhaps even more % in interest higher than a comparable mortgage. Don't forget that if you need cash down the road, there's always the possibility that you can sell the seller financing, essentially the mortgage, to an investor. Now, keep in mind that this is a highly illiquid and esoteric market, so the buyer pool won't be quite that deep. And if you do find a buyer, the offer will most likely be for a significant discount of the face value or the principal of the loan. For example, you might see offers for 60 to 90% of the face value of the loan. One last major benefit of granting owner financing is the advantage of spreading out capital gains over many years as the seller, especially if you don't qualify for some reason for the 1031 tax exchange if you are an investor, or the primary homeowner tax exemption if, for example, you haven't lived in the home for at least 2 out of the past 5 years. If for some reason you don't qualify, or perhaps just because you have capital gains in excess of what these exemptions would grant you, then it might make sense for you to consider seller financing, because it can be considered an installment sale. Essentially, in an installment sale, you are getting your principal, or you're getting gains over a longer period, many years, and as a result, you can qualify for lower tax brackets each year, because your income from where your capital gains will be lower in each year if it's spread out over many years. Anyway, we hope you found this video helpful. If you did, please hit like or subscribe. We do come out with content on a regular basis. Please leave us a comment if you have any topic suggestions or questions. We love those. And of course, if you're buying or selling property in New York, we can help you save up to 2% when buying and up to all 6% when selling in broker commissions. Check us out, www.hauseit.com. The spelling is below.